Traders at Parthian Securities say the equities market is witnessing a strong demand for banking stocks due to the impressive first half-year earnings of FBN Holdings, recommending investors take buy positions in Access Bank, UBA, GTCO, Zenith and Fidelity Bank. Oluwaseun Dosunmu, Head of Investment Research at Parthian Securities, joins me now for a market update. Oluwaseun, thanks so much for your time. Exciting times clearly for banking stock investors, especially after the FBN Holdings numbers. Before we get to your recommendations, what did you make of FBN Holdings' performance?
Thank you for the opportunity. Impressive results, and like you said, interesting times. First of all, the market didn't expect, or let me say, I didn't expect, that result from First Bank. Basically, we knew that banks would do well, especially for half-year numbers, because of the FX revaluation gains. And also, we saw that the result was largely due to cost management, prudent cost management practices and tax efficiency on the part of FBN. So we've seen that this has actually impacted the numbers positively. And the result also sent positive shockwaves throughout the market today, because we observed that when the market opened, the bid for First Bank FBNH was actually high, and we also saw that generally investments or the demand for banking stocks was actually high. And we know that tier one banks, some tier one banks and some tier two banks too would have similar results due to the FX revaluation gains. And those companies that also have dollar income lines would also benefit from this move. However, one of the things that we're also looking at is the fact that we know that in 2008 the market actually peaked, and there was a pullback, there was a drop. One of the things that we've been looking at is to actually look at the similarities and differences between what is happening now and what has happened in 2008. Now, we've looked at them critically, and we've seen that, there are more differences. Basically, what we are seeing now is that the money in the markets are actual funds. It's not margin trading, which we had in 2008. Apart from that, we have fewer foreign investors compared to 2008, which makes our market even more interesting, because we know that since 2020, when the foreign investors were not in our market has been immune to, external shocks from the global space, because, we had the impact of COVID in 2020, 2021, we had the Delta variant. For 2022, we had the Russian-Ukraine war. And throughout this period, the Nigerian equities market has been able to outperform its peers globally. So we're seeing that this is actually good for our markets. Nonetheless, we know that some foreign investor participation increased in the month of May, and we're actually excited about that. I know I talked about what their impact in our market, but then, when foreign funds come into the market, it actually deepens the market and makes the market a bit more interesting, more interesting than we're seeing right now.
Okay.
So,
well, thanks so much for that very rich analysis of the conditions. So let's talk about your recommendations now, because I mentioned, for example, Access Bank, GTCO. You're obviously big on many of these banks. Are there any particular stories that you think we can take away from the FBN Holdings numbers that you think would manifest in the numbers for the other banks as we continue into this earnings season?
So I expect the banks to do quite well. As I mentioned earlier, basically, I see more of the banks. Other banks also have prudent cost management practices too, because I know that when we started the year and we had the cashless policy, that actually brought more cash into the banking system. And I believe that some of the policies that were adopted during that time have helped banks to, remain prudent. So I see that, coming into play with the banks, especially the tier one banks, the FUGAs. We also see that when it comes to FX revaluation gains, we actually see that also help prop the numbers. Looking at, if you do a comparison between Access, UBA, and the others, you would see that Access and UBA are poised for growth in terms of the upside potential. They have more upside potential than the other banks that we know. So we're quite optimistic about them. Looking at their fundamentals, they actually they're actually giving us a positive
Right.
signal.
Okay, but let's look outside the banking sector for a moment. Clearly, we know
Yes.
there's been a very strong interest in the downstream oil space, even though we don't have too many choices, given some of the delistings we've seen and some that are still coming. But your perspective on other opportunities outside the banking space right now?
So right now, we understand that the operating environment is tough. And we also know that when it comes to, volume sales, we're going to see a decline in volume sales, obviously for obvious reasons. Consumer wallets have remained pressured. For the oil and gas sector, the oil and gas sector has been the best performing sector this year. For best performing sector this year. We also know that the banking and insurance space have been following suit. But looking forward, one of the things that we're looking forward to is actually seeing the half year numbers, because to actually give us some, guidance on what to expect. Now, what we plan to do is actually to compare the half year numbers with what they did for full year, 2022. That would actually, give us more perspective on the performance or what we should expect towards the second half of the year. So right now we're looking forward to more corporate earnings hitting the market, and that will give us more clarity.
It's obviously good to see you smile. It shows that the markets are bubbly, exciting. Thank you so much for your time this afternoon. I've been speaking to Oluwaseun Dosunmu, Head of Investment Research at Parthian Securities.